Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. We got half of the Money Masters. Tom had something come up and can't join us, but I would love co-host, so all you got to do is give me a call, 877-927-6648. Right now, you've got the Dow trading up 53 points. S&P's up 3, Composite up 10, small caps down 4, and you got Apple off $4. And so what I want to do is just carry over had a call from Don in Tampa going into the last segment, and he was asking me about the Qs, folks. And what's really so important is to, understanding when you're trading these ETFs, because there's weighting structures inside there. And so the underlying instrument, it's important to understand what is inside there. Now, with the Qs, what makes it easy is I'm going to go ahead and pull this over. Now, the Qs it's a ProShares, folks. And so you can go to the ProShares website. And, if you're inside this vehicle, I recommend that you do that just simply to understand what the weighting structure is. Now, you can download everything. You see this little button here says Show All. I'm not going to go ahead and do that here, but you can download everything into a spreadsheet, and then you can sort it. Now, if you just simply go over to their website, to the ProShares, you can see here that what we're taking a look at is the actual weighting structure as of the close yesterday. You can see that Apple makes up 16% of that weighting structure. Number 2 is Microsoft, at 9%. Now, if we just total up these here, I should have done that before the break. Let's see what kind of math I've got. So I've got 25, 30, 40, 46, 46, 52. So it's probably about 54%, I'm going to guess. Somewhere around 53, 54% of the top 10 holdings. So that's 10 out of 100 represent the NDX, or represent the Qs, if you will. So now that we have that weighting structure inside there, then what I recommend that you do, because the question was, hey, Apple was moving down, Amazon was moving down, but you can see Amazon, is 3%, so still in the top 10. But you've got to take a look at really take a look at all of them. So we can go do that one by one, or you can give me a call, 877-927-6648. You can throw me off of this project here. But as long as we have that question, let's go take a look. So we know that Apple is trading down. We certainly covered that during the first segment, but let's do that. Let's pull up that chart here real quick, take a quick peek at it. That's as soon as my eyes can. There we go. We got Apple. We're going to pull up the Apple chart here. Right now, what we do notice on Apple is that it did gap down at least this morning. The low on Apple yesterday, 496.89. The high so far of the trading session, 494.74. So, it's trying to get up there. It's going to be important to watch Apple. Does Apple leave a gap out here? And what kind of volume does Apple have inside it? So you got Apple, which is trading down just a bit at 16%. Of 16.48% of the Qs. Now, what I would recommend that you do as you're trading these vehicles, if you will, is I would just go ahead and take a look at the top 10 of each of them. And what I would do is either have a spreadsheet if you use spreadsheets, or just have a manual worksheet, if you will, and take a look at each one and take a look and see what pattern is in there. See if you can identify a pattern. Is it starting to retrace? Does it mean that it's moving sideways? Is it moving down, or is it moving up? Maybe just simply an arrow. And when you have some synergy, if you will, with inside that index, when you know that 53%, let's say 53, 54% of the index of the 10 stocks is heading in one direction, you want to be swimming with that direction. You don't want to get in front of that freight train. And that's one of the reasons why, quite frankly, in my newsletter, we did take a short position yesterday, but it certainly was not in the Qs. You want to go long strength and you want to go short weakness. You want to do that whether it's an ETF or whether it is a stock that you're looking for. You always want to be able to, go with the tide, if you will. Roll tide, as they say. So the number 3 weighting that we've got there is Google. That's 5.52%. Let's go take a look at Google. I got to take this off of the weekly chart that I've got out here. So we'll punch this down to a daily chart. Take a look at Google. Google trading down just a bit. Now, in the case of Google, we know that Google had a disappointment with regard to their earnings release, their news release, which took place on January the 19th. You had Google gap down with volume, 10 million shares. And when you take a look at swing points, because what Google is in the process of doing is making an A to B equals CD down. That A point on Google is all the way out here at the highs that it made. When it made those highs, it did it with 2.8 million shares, all the way down to January. That was the January 4th high. Now, the B point, when it made the B point, it did it with 3.2 million shares. That's forgetting about the gap that took place 4 or 5 sessions before that. So your B point on your ABC down with Google is at the January 26th low, 564.55. Now what it's done is it's retraced back to a high of February 9th at 614.50. I think that is the high out there. Just let me check these things out. Yeah, that was the high. So that becomes our C point. Now, if we take a look at Google, let's take a look at the type of retracement that it did back on the, as it did a retracement. It came back and did just a little bit above a 0.382 retracement. Come on, work out here, mouse. There we go. Okay, so when we take a look at the retracement, so from that high on January 5th to the low that we had here on January 26th, you can see the 0.382 retracement would have taken it right in here in the 605 range. It actually got up to 614. So what that's telling us, if you will, it's telling us that, you know, you've got some wound up pressure, if you will. You only backed off just above a 0.382 retracement. And so that says, you know, let's watch how this C to D leg unfolds. But when you only do a 0.382, and for me, folks, that's in essence what Google did here. If it comes through this B point, so if it comes through the January 26th area and it's coming through with more than 3.2 million shares, then what I will tell you is Google is set to do more than a 1-to-1 A to B equals CD down. It will more likely do a 1 to 1.272, which would take Google all the way back to where? That's right, October 4th. You know, there are certain days that you want to be able to make sure that you've got marked on your calendar or on your charts, if you will. It's October 4th that you're looking at. We're certainly looking at October 27th, if you will. And in the case of Google, that's what we're going to be wanting to watch. You do have Google trading down as far as, you know, any candle patterns or anything that we've got. Let's go on to the next one. So that was Google. That is at 5.5%. Next stock, number 4 in the Qs, is going to be Oracle. So let's go take a look at Oracle. Symbol on that, ORCL. Here we've got the Oracle daily chart up on the screen. Now, Oracle also looks like they had a disappointment. Almost looks like we're looking at the Google chart, doesn't it? Folks, because on December the 20th, you had Oracle close out at 29.17. Gaps down in the following session, gets all the way down to a low of 24.91. Does it with 183 million shares on this way up here, folks. You know, it is doing it not with any kind of conviction. Now, what I do see, it looks like it maybe was trying to complete an ABC down. And where we would start with here, our A point would be the October 28th. How about that? October 28th, October 27th, if you will. So October 28th or the 7th is going to be your A point. Then it looks like November 25th, because I recognize that candle formation. That candle formation is what it looks like on the ETFs, and it looks like that on some of the Dow charts. So a 1-to-1. So what we've done here with Oracle, it's already made over just a little bit over a 1 to 1.272 A to B equals CD down. Now it's just simply, you know, forming perhaps its next pattern out there, its next ABC down, and we'll just simply come from this swing point, which was our C point. I'm going to go ahead and erase this. So let's take a look at the type of retracement that Oracle has made off of the December 5th area to the low that was put in here on December 25th. And what you'll see is the 0.618 area is 29.44, where Oracle got up to was 29.25 on February the 2nd. And I don't have the ability to just punch up David's art of the chart software up here, and I don't want anything to kind of blow up on my chart because I don't have Tom in here right now. But, you know, it looks like what Oracle is trying to do is at least maybe come back down and test this area or make a new A to B equals CD down. But there's nothing in this chart here that tells me otherwise. So that is on Oracle. That's the number 4 holding in there, Intel Corp. So we know Intel has been on a tear. The symbol on that, folks, INTC. So you got Intel Corp. That looks like it's trading out at 26.63. Closed out the session yesterday at 26.58. So not really a whole lot going on here. And what you do have is you've got some consolidation inside Intel at the top, and makes a lot of sense here because what you did was you had another sign of strength, if you will. I'll get it out. Don't worry about it. Another sign of strength on January the 20th when you gapped up. Well, you didn't gap up, but you moved up with some volume. Moved up with 101 million shares. and you gapped up, and not gapped up, I want to say gapped up for some reason, but you moved up with 101 million shares. You can see was able to get over all of the swing points that had, with volume, if you will. And as we take a look at Intel, I'm going to go ahead and pull this back now on a weekly chart. So let's see, what is it that we're doing here on the weekly chart with regard to Intel, because this thing has been strong. And let's back this up. And what Intel is trading inside of right now, it's trading inside the December 7th swing point. Now, that December 7th swing point on a weekly basis has 277 million. So what I'm going to do is I'm just going to take my, it's going to be a little bit easier to visually see. So let's come down here and we take a look at the volume on a weekly basis. And because I do believe we are, let's come and take a look at the lows. As we entered that swing point on the weekly chart out here, take a look. And the low there was 25.83. You're trading out at 26.65. And as we came into that swing point, it was the week of January 20th. You came in with 289 million shares. So you came in with enough volume because you had 289, and that 289 was going into 277. So what that says to me is that Intel wants to at least get up and tag, as long as it's here for the journey, as long as it made that long travel all the way off of the bottom on the weekly chart, going back to the March 09 area. What Intel wants to do is it wants to go try to tag the high. The high there, 27.99. Not putting a whole lot of juice in there right now, but it's got about another little dollar, buck and some change in order to go take a look at those highs. But I would say with Intel hanging out at these high areas here, that what Intel is trying to do is get up towards the top of that swing point. We will come back to this part of the process and analyzing, if you will, the cues. But first, we're going to go to Boston. We're going to go to Paul in Boston. Paul, thanks for calling. Thanks for holding.
Hey, how you doing? I'm looking forward to seeing you guys when you come to Boston.
Oh, great. We are looking forward to seeing you, too, as well. And, folks, we're doing that on March the 3rd, Saturday, from 9 to 12. And where are we going to there? Let's see. We're going to be at the Boston Burlington Marriott. And the easiest way to join Paul and Tom and myself is go over to the homepage at tfnn.com. And under the carousel or under breaking news, you'll see a little link there. When we get back, we're going to go back to Boston. We're going to go take a look at FTR with Paul. 877-927-6648.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of tfnn.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I'm Steve Rhodes, co-host of the Money Masters. Tom couldn't join us this morning, but the Dow is up 60 points right now. S&P is up 3, and we're going back to Boston to our man Paul, and he wanted to take a look at Frontier Communications. Ticker symbol on that is FTR. So tell me what you're doing, how I can help you this morning. Oh, did we lose Paul?
I'm right here.
Oh, perfect. Okay. There's no way we're going to lose somebody from Boston.
No, it's a pretty big dividend-paying stock.
Okay.
But, it's looking like it's showing a pretty good bottom.
Yeah. Are you already in it? You're looking to get in it?
No, I'm not in it yet. Okay,
good. Now, this is one of those stocks where if I go ahead and I pull this back and I take the monthly chart on this, you can see that, this thing is near its all-time low. So they should be trying to pay a pretty good dividend to get you to put your money in on this thing. The low on this is $3, and 81 cents. That was made this past month. Let's go ahead and pull this out on a daily chart. Okay, and on the daily chart, what you did have is you did have a hammer candle, and that was on January 27th. But you came down there with a lot of volume. And a hammer candle, those are great candles. But what you want to do is you always want to take a look at charts and see where there's other hammer candles and see how they've worked. Well, in this case here, if you go back and you take a look at other hammer candles, which typically are really good support areas, you will see a number of failures out here. You've got a hammer candle that took place on October the 4th. We know that that's an important low as we take a look at our marketplaces. So if you're going to just simply try to correlate this stock to the market, not only did that hammer candle, fail, it failed miserably. The low there was $5.33. It got down all the way here to the, $3.81 level. If I put on a weekly chart here, let me see here. I know I don't have it necessarily populated on this chart, but on a weekly chart, you also see weekly hammer candles. There's one here from October the 7th. That would make sense because we're looking at October the 4th as well. That hammer candle failed. And so, so because you have, when I take a look at the candle patterns that are out there, what you want to do, you do not want to step in front of this, in my opinion, you don't want to step in front of this until it gets down to test that $3.81 level on January the 27th. See, you are, Paul, you're trading inside that candle right now. And the high on that candle happens to be $4.42. That's also the swing point, if you will, that is out there. But what you'll see is as it came back, it got up to a high, let's say during this trading session here, it got up to a high on February 3rd, which makes sense, right? Because our markets, right, they punched through. We got that great jobs report, if you will. So in the case here, it came through with 28 million shares. It was going against 42 million shares from January 26th. So it wasn't even able to really punch up. And then on the following trading session, Paul, what I want you to take a look at is February 6th. The candle that it made there was a bearish engulfing candle. And what does the stock do? It continues to move lower. And then as it continues to move lower, it does that into February 10th. And it does that. Volume is picking up. Just on this little short leg down, volume was picking up, if you will. And it came down into that area with 41 million shares. So you got 41 million shares down there. That low needs to be tested. The low on that is $3.98. But then you're still inside this candle. And as long as you're inside that high volume low, you've got to wait for the bottom to be tested. And then when that bottom gets tested on a stock like this, there is no reason, absolutely no reason for you to go ahead and step in front of this, because it still has $3.80, if you will, to go even lower, all the way down to zero. Because in this case here, let's say you went ahead and bought it at $3.81. Do you realize every other shareholder above you is just waiting to try to get out of that stock? The stock that we're looking at, folks, here is FTR. And so this would be one of those flights, I guarantee you, where as you were, if you were on a flight and you were coming out of as you were leaving the gate area, the pilot, if I were the pilot, I'd be putting on the turbulence for the entire flight, if you will. Now, when could you take a trade in this? You could take a trade in this when it tests that low, it does it on lighter volume, and you see a sign of strength. The sign of strength that you're looking for is where you've got big volume in that. Why? Because that sign of strength might be some type of fund or funds that are coming along with you. It's not going to be enough of you or me or all the tigers out here that would be buying these shares that would punch up the volume on this stock. Not that we couldn't, with it being a $3 share, if you will, but you really want to see a sign of strength, then let it back off, and then get into it. Does that help?
Well, you say the sign of strength. I thought I was seeing it yesterday.
No, you are still inside this swing point. Here's the thing with this sign of strength is when you have a high volume low, and especially a high volume low, those end up being tested. And in this case here, you're still trading inside that candle. You want the actual low. You want $3.81 to be tested before you then look for your sign of strength. Okay?
Okay, good analysis.
Okay, you bet. Thanks for calling, Paul. You bet. You too, folks. I look forward to seeing you up in Boston. 877-927-6648. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I am co-host. Tom couldn't join us, so welcome back to the Money Masters Show. You've got the Dow up 62 points, the S&P's up 4, Composite up 10, small caps leading the charge on the way up 0.8%, $6.74. And just to real quickly go back to Paul's comment with regard to, a sign of strength off the bottom. What I've got up here on the chart is I've got dry ships. Here, what you can see is an absolute breakout area where, if you take a look at all these trading sessions prior to February 3rd, we know February 3rd was, one of those important dates that we do want to note. Look at the volume here, basically ready, very steady. You had low volume, if you will. So you had accumulation going on inside dry ships, DRYS, that's the ticker symbol. Here is where you see your first sign of strength. You see that on February 3rd. You come off the bottom with 19 million shares. You then, on the following session, you come up with 27 million shares. So you've got wide price spread, and you've got some conviction with regard to volume. So now what you want to do is you want to wait on a stock like this and wait for it to pull back, into this breakout area. The question is just how low will dry ships get back to? Folks, this stock actually could get back to $2.18. Let's go to Dave in Denver. Dave, thanks for calling. Thanks for holding.
Good morning.
How are you today?
I'm doing fine. Looking forward to seeing you next week.
Oh, perfect. Perfect.
Had a question for you.
Yes.
I'm looking to get into the ES Mini.
Okay.
And would be interested just if you could talk through, A, whether you agree with that approach, number one, and number two, what your strategy would be in trying to re-enter that from the short side.
Okay.
Whether you'd be just looking for 618 or...
Okay. You're looking to go short or looking to go long?
Short.
Looking to go short. Okay. Right. So the first thing that folks that I've got up on my screen here is the ES Mini. And one of the things that I was pointing out in the earlier show, the 9 o'clock show, where we're taking a look at the Dow futures contract. So let's switch over here and see what the ES Mini did and why Dave is thinking about trying to get into a short position. Now, one of the things that I'm showing here, let me blow this up here. I'm showing this ascending wedge that we have. So the ascending wedge is going all the way back to December the 7th, and that's the top of the swing point. So if you're going to go ahead and draw along with us, start with that swing point. The next swing point that it hits on this wedge pattern is really January 26th. And you can see how the ES Mini here has floated up along the top. If we take a look at the bottoms, what we're taking a look at is I'm starting at December 19th. The low on December 19th is 1195, and next spot where it hits the wedge, if you will, this ascending wedge, is on January 30th. So when we take a look at the ES Mini, it in overnight trading, and now this pattern here, folks, most of the time, and I mean most of the time, it will resolve itself to the downside. So Dave has been patiently waiting. I have been patiently waiting to see how this plays out. You can see we're trading just inside it right now. But, you know, it already reared its head, if you will, and it gave us a signal yesterday, and certainly in the overnight trading session. That signal yesterday was the May 2nd area. The May 2nd low on the ES Mini is 1354.75. You actually finally got up into it yesterday. It got up to a high of 1358 even, and then closed out the session at 1342.25. So you tagged that May 2nd area, and when I was trying to just simply and you've got the right correlation going here, because when we take a look at the SPYs gave us a bearish engulfing candle at the top. And we know it at the May 2nd area. And so I just let the futures contract here kind of drive that pattern. So now the question is, where do you get in? So let's go ahead and let's take this thing down to, we'll start with a 30-minute time frame. And start with a 30-minute time frame, see what it is that we have here, and I'm going to go ahead and erase the stuff that we've got on here. So we're just simply looking at a clean chart. And so what you're going to do is we're just going to take a look at the retracement level. That retracement level coming from the high that was put in yesterday when it got to 1358 even, all the way down to the low in the early morning session when it got down there at the 1334 area. Did that at 3 a.m. Dave, you might have been up. It's only 1 o'clock in the morning out there.
That's right.
In Denver. Right. So you might have been up.
That's right.
Yeah. So now as we're taking a look at the retracement, hopefully, folks, are following us on Tiger TV. What you can see is it's come up through this point 382 area. The 382 retracement from that's going from the highs to the low of yesterday is 1343. Now you came through here, and the size of the bar is a decent sized bar on the way up. So you wouldn't want to enter a short position on the 30-minute chart until you got into that 1348.93 area. We're trading out right now at 1346. So I'd wait to see how that area got tagged, and so I would have a 30-minute chart up on my screen. And really, the more ideal trade is going to be if the ES Mini can push all the way up into that 0.786 area, that 1352, because that is in essence where you saw the ES Mini start to fall off the cliff yesterday, which was right around the noon time frame. And so, you had some decent volume, if you will, off of that time frame. Right now, you've had in this last couple trading sessions, you've got some decent contracts. You've got 200,000 contracts, in that 30-minute time frame. So that's on the 30-minute chart. I would wait. The better trade for you is going to be to wait to 1352, unless at the 1349 area there's some other signal that it gives us. And that other signal might be like a bearish engulfing candle or something like that. Let me back up a little bit further. Let's go take a look at the 10-minute chart now on the ES Mini, and just to see if we have any other patterns forming, such as an ABC. And you can see that we really don't. All that we have is just simply a straight retracement on the way back up here. Because what you'd like to see is you'd like to actually see some type of ABC pattern, and then if you've got the D pattern taking place around the 0.618 or the 0.786, that gives you even more conviction, because then you're forming a Gartley pattern. And so what we'd be taking a look at here, let's say that the ES Mini decides to back off right now. What you could be looking for is, where would this thing potentially back off to? Well, it would be either the 0.382 or the 0.618 area. So if I'm just going to, in advance, and I'm not saying it's going to back off just yet, but we're just trying to draw some advanced patterns here. If it did back off from this standpoint and came down to the 0.618, well, what that would do is that would give you an A to B equals C to D right at 1351, which I think was pretty much close to the same area as that 786 on the 30-minute, wasn't it? Let me see.
Yeah.
Okay, so yeah, 1352. So even if the ES Mini starts to back off from here, let it go ahead and complete a pattern, because right now you're kind of in limbo, if you will, being in between floors, and you want to put your money to work when you've got when the market has proven itself to you, and part of my analysis of proving itself to you is always approaching the chart freshly and taking a look for any new patterns that were out there.
And I guess a follow-up question on that, though, is let's say you did exactly what you just described.
Okay.
But you were of the belief that the market's trying to roll over in a general sense.
Yes.
Would you have a defensive stop, maybe something in the low 40s? In the event the market just pukes?
Okay. So that's really a great question. So the question, folks, is using a sell stop in order to enter the market. In essence, that's what you're asking?
While you're waiting. In other words, if you hit the 50 or 52, then you're short there, obviously. But if you're wrong,
that's right.
Then what's your game plan B?
Okay, so that is, thank you for even asking the question. That is great, because it is, folks, it is good to be able to take a look at, okay, here's a pattern, but if this doesn't work out and the market continues to go south, you want to have a bus ticket already stamped, if you will. So what I would be looking for there is I would be looking for it to get underneath the low of the session that came in, probably right around the 1334 area. I would let it get I would let it get below the 1334.
1330 or something.
Yeah, even 1332 probably is pretty good. Let me just let me just come back to to better answer that question. Let me back up and come to the 30-minute charts and see what else we're up against. So what the ES Mini was doing even on the 30-minute chart was just simply coming and making 100% move of a move, and that was going back into the session. The actual low part of the candle is at 10:30 in the morning on February 10th, and the low there is 1333.75. So if you can come below 1333.75, so that 1332 area, then I would go ahead and pick up the ticket. Because why would you do that, folks? Well, because what Dave knows, just simply by being able to ask that question. Let's say that the high, in fact, was put in, because it doesn't have to. He knows just as I do. It doesn't have to get all the way up to Sweet 618. It could say, okay, enough of the move here. Well, in this case, what you'd be looking at is an ABC down that would take into the 1320 range. So, but make sure that you still have a stop in place, as always, when you trade.
You bet.
All right?
Absolutely.
Hey, you bet. And we'll look forward to seeing you in Denver, folks. And I know that we still have a few spots out there. So if you're sitting on the fence, you were thinking about coming, but you haven't signed up yet, then please go over to the homepage at tfnn.com. Sign up. Tom and I will be there next Tuesday evening. In fact, let me just make sure I let you know exactly where we're going to be. We're going to be at the Marriott Tech Center. That's going to be from 6:30 to 9:30. That's Tuesday in Denver. Then in Spokane, we're going to be at the DoubleTree Hilton. That's going to be on Wednesday, February 22nd, also 6:30 to 9:30. Then on Thursday, we'll be in San Francisco at the Intercontinental San Francisco there. So please go to the homepage at tfnn.com. And if anything comes up, folks, even though the markets are closed on Monday in celebration of President's Day, just send us an email. Let us know that you're not going to attend or something came up because, we may, in a couple of these spots, we may have a waiting list in order to get in. So go over to the homepage if you'd like to attend, because we'd love to be able to see you there and give us a chance to growl and prowl, as Tom says. So let's continue taking a look around these markets now. What we were doing was we were looking at the Qs. So I'm going to go back over to the Qs, and what I was doing when I opened the show, and that was getting back to a caller that we had earlier. We were taking a look at really, when you look at the ETF structures, just how important it is and how helpful it is to your trading to go in and take a look at what's going on inside the top 10 holdings inside there. In the Qs, what you're looking at, let me just try to pull that up. Let me see if I can do that here. Where is it? Well, this daily holdings. There we go. Daily holdings of the Qs. So I'm going to go ahead and pull that over here. This is the ProShares. You can go to their website. You can type in Qs, and you'll see a button there for daily holdings. I think we had gotten down to, we were looking at Intel. Then let's go take a look at Cisco. Cisco represents 3.6% of the Qs. Let me get rid of a couple of charts that we had that we put in there while I was on that set of the CSCO is Cisco. And let me clean this up here. You can see Cisco trading out near its highs. Made a high on the 9th of February. Did that with 131 million shares. So it had some nice juice up there. You can take a look at that. That says that high wants to be tested as it's retraced here. You can see as it's retracing, doesn't have much volume on the way down and still hanging inside that swing point. So let's take Cisco back a little bit further. Take a look at that time frame. And the importance here as we're going through each of these stocks and we're taking a look at the Qs, as I was pointing out, if you're taking a look at going short a market, what you want to do is you want to go short the weak areas of the market, not the strong areas of the market. If there is a pullback, then what you're looking at, folks, is you're looking at being able to buy the strength. So you want to do just the opposite. So when we're taking a look here at Cisco, Cisco is coming into a huge downdraft from February 11th. You did almost 1 billion shares, 999 million shares on February 11th. So you take a look at the downdraft. That is where it is in right now. So it makes sense as you take a look at this, at least it makes sense to me, that you would see a stalling pattern, if you will, in Cisco. Why? Because you have such a supply line. A supply line where you have, almost 1 billion shares during the week of February 11th that changed hands. Now, a lot of those folks, when they bought there, because you always got a buyer and a seller, right? When you're selling, somebody's buying because they think it's a value. When you're buying, somebody's selling because they think, hey, you're now buying the dog, if you will. Well, think about those billion shares that changed hands in February of 2011. Those folks haven't seen that price point. From there, what they did was they wrote it down from, let's say, anywhere from a range of $18.61 if they were lucky to buy it at the low, but more likely up towards that $22 range during that week. And all those folks wrote it all the way down into the August 12th week, where it got down to a low of $13.30. That's quite a haircut, $13.30. And if you had bought that at the highs, you bought that at $22, that's probably a 40% haircut. So if you were one of the folks that didn't use stops, and guess what? If you've got money in a 401k, through your work or what have you, and it's not a self-directed IRA, I can guarantee you one thing. You're trading without stops. You're trading without stops if you are not paying attention and going to cash and understanding what's inside those holdings. Because those money managers, folks, they stay invested. By charter, they stay invested. They don't sell short in most cases. And so, and I know that 70% of households across the country have got 401ks. In fact, the average balance is $100,000. And so, if in this case here, let's just say, forget about whether it's a 401k or you were a money manager, but you've got 1 billion shares, that's a supply line. And if you had taken that 40% haircut, if you will, as the market's moving back up, you just want your money back, right? In fact, you so badly just want your money back because that's your pattern. That's the normal pattern that folks would have. You're not even going to go pay attention to the chart to determine is there some bullish noise here, if you will, or not noise, but is there some bullish candles, bullish volume, or what have you. You just want your money back. Folks, step away from the trade, come back, take a look at a chart, always see if it's giving you new information, and don't have a problem with changing your mind, folks, because that is how you play the money game. We'll be right back, folks. 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontofTFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. 877-927-6648. You got the Dow trading at 56 points right now. S&P's up 4, and leading the charge are the small caps up almost a full point, up 8, a full percentage point, I should say. Up 8. Hey, let me make sure that I clarify one thing. If you have signed up for one of the Go Long America Tour shows, whether it's Denver, Boston, or what have you, if you've signed up, you're automatically in. But we know that they are filling up quickly, and so I just want to make sure that that you folks have the opportunity to attend. A lot of times people will put off the decision, so I want you to go to the homepage at TFNN.com now, sign up early, and then if you can't attend, just please let us know. Now, so why the market's doing what they're doing? You got to love patterns, folks, because what I've got up on my screen here, I've got the Euro-US dollar 60-minute chart that we've got here. Let's just start with a clean chart, if you will. And on the clean chart, if we just simply come from the swing point from 9 o'clock in the morning on February 6th, made a swing point low in there at about the 130 range and some change, 130, 265. Then it makes that high at around 10 o'clock in the morning on February 9th. Then we make an ABC down. Now, the ABC down that we do, just to take a look at it here, is more than a 1-to-1 A to B equals C to D. Let's take a look and see what do we have here. You've got a 1. It's even over 1 to 1.618. A to B equals CD down. Now, you did make a 1-to-1 A to B equals CD down that completed right here at the 10 o'clock time frame on February 14th, on Valentine's Day, moved up and then continued to move down. Now, you know, we take a look at beautiful sacred geometry numbers, 1.272 being one of our first expansion numbers. if you will. And what you can see here, the expansion from the low that was put in here this morning at 9 o'clock, the low was 1.18. That's the actual, rounded low, if you will. We use 1.272. It did not make it all the way back there. Now, what you do have, if you're going to look at expansions between swing points, it is important to take a look at where it made this one-to-one move, where it completed, as I said, on February 14th. I'm going to turn on this other, let me just erase this right now. Okay, and I'll turn on this other tool, and what you will see is right here it made a 2.618 expansion between this swing point low, February 14th, all the way to the low that was put in this morning. It's why you want to be familiar with these numbers, or you want to be able to paint these in on whatever it is that you're trading out there, because these numbers, these Fibonacci expansion and contraction numbers, they absolutely are so helpful at identifying fear and greed that exist within the trading mentality. Why it works, I don't know. I don't know how electricity works, folks. I just use it all the time, and I want you to use these numbers as well. You can see that what the euro has done so far, it made a 0.382 retracement off of this high coming back here at 3 in the morning on February the 15th. Now it is traded a little bit lower. The question is, for the euro to really have some strength, for there to be some strength in the market, you're going to see the euro need to trade at least to that 0.618 area. And not that it can't be done, but you're going to want to pay attention to these Fibonacci numbers. You can see the 0.382 where it hit. The next level up after a retracement down, perhaps this is just setting up a Gartley sell pattern. Of course, what we're looking at here is the 60-minute chart. But stay tuned. Now, what would that look like? Well, we'd have to dig down even further. Let's dig down even further here. See on just a 10. Let's go to the 5-minute chart here. Let's and those volume numbers at the bottom, they mean absolutely nothing other than that I just don't have it turned off. There we go. Okay, so now we can see the euro starting to make its descent, if you will. So it's coming into Tampa International Airport, right here in beautiful downtown Clearwater. So an ABC pattern, if this were just simply going to retrace back to 0.618, because, folks, you wouldn't come to Tampa and not come visit us at TFNN. So now what we've got here is an A to B one-to-one pattern that could be set up that would take you into this 130.994. Let's go back to that 60-minute chart. Let's see where that 0.68 was. Pretty close to that area, folks. Anyways, time flies. Stay tuned. Kate Stalter coming up next, and Larry Pesavento with the Futures Hour. Ken Shreve from 3 to 4. I will see you tomorrow morning at 9 o'clock. Have a great day, folks.